Meet Ray. Ray is an incoming senior at State University who just finished up a summer internship at Corporate Co. Ray has watched our first two videos, Taxes 101 and Do I Need to Pay My Taxes, so he understands that he meets the income threshold and needs to file a tax return by April 18th. Predictably, Ray is bummed. However, he really shouldn't be. Filing a tax return can actually make Ray money. Ray is stunned. How can that be? Well, the reason is simple. People like Ray, who work for a traditional employer, have a specific percentage of their paycheck withheld each month for taxes, as determined by their W-4, a form they fill out when they first start their job. And while the W-4 is fairly straightforward, there are a few things to be aware of. 1. You'll be asked to specify your personal allowances, things like whether or not you're married, filing as an independent, and so on. Don't panic. These just allow your employer to determine how much of your paycheck needs to be withheld for tax purposes. The more allowances you have, the greater your take-home pay. 2. If you're having trouble filling out your W-4, don't worry. We refer you to a step-by-step guide on our website that makes filling out the W-4 a breeze. So great. Money for taxes has been withheld from your paycheck by your employer. Ray is thrilled by this convenience. There's just one problem though. Ray's employer doesn't know exactly how much Ray owes in taxes. Only the IRS does. Thus, when Ray files a tax return, the IRS may actually find he overpaid his tax bill and refund him the difference. However, before you get too excited about cash falling from the sky, most of the time tax filers will have a balance due. In fact, if you think you'll owe at least $1,000 in taxes, even after accounting for the money withheld from your paycheck, you'll have to pay what are called estimated tax payments each quarter. However, as a traditional wage-earning employee, without a large source of self-earned or unearned income, Ray doesn't really care about this. He just wants to know how to file a standard tax return. Well, fortunately for Ray, filing a tax return has actually become pretty easy. Readily available software allows people to file returns without a lot of scary math or an in-depth knowledge of the tax code. In fact, all Ray needs to do is gather up his relevant tax forms, most prominently his W-2, which breaks down how much money was withheld from his paycheck by his employer, and then answer a bunch of plain English questions, either on his phone or his computer. This will give the software the information it needs to automatically fill out his state and federal tax returns. Even better, thanks to the IRS, tax filing software is now free for those making below $62,000 a year. So clearly, tax-paying software is amazing, right? Well, it is, but Ray still may want to hire a licensed tax professional, such as a certified public accountant or an enrolled IRS agent, especially if he was recently divorced, he owns his own business, or he simply lacks the confidence, time, or energy to do his taxes on his own. In these cases, the expertise and convenience of a professional will be invaluable. However, there is a trade-off. Hiring a licensed professional will generally be more expensive than handling your taxes on your own. Finally, if for whatever reason finding a CPA or enrolled agent is difficult, Ray could also use a national tax preparation chain, like H&R Block or Jackson Hewitt. However, he should always keep in mind with these types of companies that 1, their agents aren't always licensed, and 2, they aren't necessarily cheaper than a licensed professional. Congratulations, you have finished our Tax Basics curriculum. If you want to see our free recommendations for great tax filing software, or just more educational material, be sure to check out our website.